All right, good peoples. It is Bruce with Targeted Wealth Creation back at you. It is U.S. time, Monday morning. Happy Memorial Day. Here it is Monday evening. All right, so uranium. I have a lot of charts. I have a lot to talk about, but I'll be fairly fast. No rambles at all on this one. But I will tell you detailed information that isn't necessarily all on the screen, but it'll be on subject, guys. All right. The other thing is uranium is breaking out, just like platinum was breaking out. What I didn't give you guys in platinum was all the supply demand uh, for platinum and palladium, which I just totally forgot to add. So next time I do an update, I'll do that. So I was thinking to myself on uranium, I should tell you about that because a lot of it's in my head. But sometimes when I tell you, I want you to see it a little bit in writing. But here's some of the factoids on uranium. First off, it's the most efficient energy there is in the world. So I would say the least efficient are some of the green methods. Wind, right? Wind's inefficient because you don't always know when the wind's going to blow. There's certain areas of the country, the world, passes that we know the wind is stronger. But that doesn't mean it's the same level of strength. And then second is solar. So when the sun's shining, it's not overcast or cloudy, then you get it. And then you have oil and you have gas and more pollutant types of energy, but they work. And then the most efficient of all is uranium. It's just efficient. But because of the danger, the radioactivity, and some of the accidents years ago, Fukushima and Chernobyl and so forth, people got fearful and stopped going. Well, that trend has completely changed. All you have to do, and especially you dividend guys, about AI and about the huge energy demands for these supercomputers and these super data centers and AI, and how Duke Energy and some of these companies, energy companies can't even keep up. So the computing power that the world utilizes, from pharmaceutical to military to you name it, there's a need for supercomputing, especially in healthcare and pharmaceutical and all of that, really pharmaceutical, because they're doing discoveries, right? There's all kinds of things on aging. So there's always something that you can do, let alone outer space and some of these weapon things and deployment of satellites and so forth. So let me get to the fact that uranium, the go-to energy. The world really needs to go to it, is going to it. Japan, after Fukushima, shut down all their nuclear reactors. Well, they're almost back up now with fully all of the ones they had shut down. So if France is a huge nuclear company, I think like 70 to 90% of all the power generation in France is from uranium. The US is moving. China's trying to move that way. China and India were the two countries with the largest world's population, but they're very coal focused, and they realize that's a dirty, pollutive type of carbon, right? But you can't in nuclear, although there are some things going on in SMRs, small module reactors, which is a new trend and things like that. But in general, a nuclear reactor takes 10 years to plan and to build it. And guess what? The yellow cake, the raw material, the uranium, it's like 2% of the budget. So when people say, well, how high can uranium prices go? Well, they can go up fivefold, tenfold. But if I told you gasoline was going to go up 10 times, you'd be like, no, people just won't drive. Well, let me ask you this. What do you do when there's no power and you're on life support or something in that way? So blackouts really aren't an option. No power is not an option for a lot of people. I realize in certain parts of the world, I'm over in Asia, they call them brownouts. But when I was growing up, I don't ever remember it. Now, when I've been back to the States many times, occasionally I see something like that, a hiccup in the grid or that. Over here, it's pretty regularly. I don't have a generator where I'm at, but I plan on being in a building that has a generator. I did live before and owned an upscale condo, and there was a generator in that building, and I really enjoyed it. I do little backups for a laptop and for my router that'll run 3 or 4 hours and a few things like that. A lot of people don't realize when there's no power, you can still have internet. It's just you need to power the router, and it's very low wattage. It's not like I'm using my desktop on most of what I do. But anyway, I wanted to give this baseline on energy and why uranium is really important, excuse me, going forward. It's just very important, and you'll see it, and pretty much the world has figured out how efficient it is. So your first world, your large countries are just going to go more and more and more to nuclear. And again, it takes a while. So what happens is these big companies, they subscribe to the major suppliers of uranium. But I don't know if you know it, but uranium's mined out of the earth just like gold and silver and a lot of other things in extracting oil. It's like a yellow cake, the raw stuff, and then it goes into the reactor. And I'm no expert in the subject, but I've studied enough. So let's talk about this just to frame this. So I pulled this up. Here's a more detailed look. Growing nuclear capacity. Demand for uranium is largely determined by the install and operable nuclear generating capability worldwide, which I just said to you is growing, with projections indicating significant growth in the coming years. So there's a renewed focus on nuclear because it is a very efficient and very low carbon. So if you want to talk about pollution and the lack thereof, it's very efficient and very non carbon. Okay. So demand forecasts suggest a significant increase in uranium demand, with some models projecting a 5% undersupply through 2030, potentially peaking at 7% in this current year of 2025. As demand rises from 165 million pounds per year to 230 million pounds by 2030. So there's gaps and challenges in production, and there's some large parts of the world that mine uranium. Kazatomprom is the largest. It's over in one of the former Russian bloc countries, um, and you'll see that where I can't even get a symbol correct on it, but these ETFs can buy it. All right, so let's jump in now to charts, how you can prosper. Let's talk about the mining environment and some ratio and what to look for and charts and technical analysis. So there's three ETFs. I just, for my own education, I forgot all about URNJ, which is like JNUG in the metals, right? It's the junior guys. I know many of the company names because I've owned them. And then I've been in URA for about 3 years. I've been in URM for about 3 years. So what I did also, guys, is I went out here and showed you their payments. Now, these guys pay a lot when their underlying holdings, which I'm about to show you, earn a lot, right? And so I took URA. It's 3183 on Friday. It was up 11.61% in a single day. URNM was up 12.14%. These are closing prices here. The URNJ was up 15.24%. So these things, when it starts moving, and it's been moving for a week or two, but it's breaking out now. And it went through a winter. It went through a uranium winter where they just beat uranium stocks to death. So one thing I'll tell you guys right here and right now, um, uranium is volatile. but I do suspect we're going to have a 3x, 4x, 5x, maybe a 10x on some of these smaller uranium stocks just over the next 3 to 5 years. Because getting into 2030, we're undersupplied. We in the world are undersupplied. These miners can't keep up. And I'd say only about a handful, maybe 5 to 10 of the juniors are going to come through and become big mines. And there's probably 50 little juniors. So 20% are going to be successful, but those that are successful are going to be very successful. And in uranium, not unlike gold and silver mining, but even more so, if you don't have an experienced mining team, CEO, geologist, etc., your chances are very minuscule. So listening and talking to somebody like Rick Rule, if you want to watch some of Rick Rule's, there's also Justin Yoon. I've watched his dividend or uranium something another. He's out there on YouTube and on X. I follow him sometime. Don't have a current subscription to him. He has a subscription service. Okay, so there's a lot of data, but I wanted you to know they do pay dividends. Now, URNM and URNJ pay annually. And so here's the last three. Now, this zero, they just didn't pay anything. Uranium was in the tank, and the miners didn't do anything. And so they didn't pay. And so URM didn't pay any dividend. But in 2021, it paid $2.41. Now, this stock, now it did go through a split. When I was buying it back in 2020, it was like 40 or 50. I think it went to 70 or 80. I jumped in at like 40, and within a week or 10 days, it was 70. I sold some 80 calls, and then it just hung around there for a long time. And I think I don't have a chart in front of me, but I should pull one up for you guys for my own. Geez, let me do that. I mean, it had to be 27 recently, something like that. Yeah, it went down to about $28 in early April. Here is a URNM, right? Here's that gap. But look at this. But this has been brutal, this decline. I don't know what a 2 year looks like. So I held on. I just held the stuff knowing that ultimately it's going to go up. But in all honesty, I probably should have sold it and planned to buy back in. Now, I didn't know that the down, I think I thought this was going to be the end of it. And look, I mean, but I was buying in this area. And this is still a good buy. I'll show you in the charts where I think this is going. I think it goes back up to 60 again. And you can take profits if you get it at under 45. And, that's a 33% return. And you won't collect the dividend unless you own it because typically they declare and pay in middle of December, end of year type things. Now, on this pays twice a year, but this URA, they have very similar holdings. I'm going to show you the holdings or the top 10 holdings. It's a little bit price less, and this thing was beat up. Let me go see where URA. I got a lot of URA charts, but not necessarily trying to show you. Here's URA. It got down to under 20 in that April timeframe. And look at this. It goes up to 34, and a couple times it's been down below 20. So they're good buys when they're down like that. Both of these have options, or at least I've played the options a lot in URNM, not as much in URA. But I believe URA has options. I just know for sure URNM does. But so they're not massive, but $2 on a $40 stock isn't bad. This has been cheaper. So if you're buying this thing, so you can expect dividends on these stocks. This one, it does pay mid-year, but when you look at it, it's four. The bet it was it's 10 cents. It's 4 cents. I'm showing you the December because it's these guys only do December, and URA does December and I think June. Okay. But the June is very minuscule. It's never very much. So I didn't even bother to add it in here. So I didn't want somebody to say, "Oh, Bruce, you forgot about June. It should be another 4 cents or another 7 cents or another 10 cents." I just figured I could tell you. All right, so let's look at some ratio charts. So when you have an environment where gold is super high, remember, well, gold actually, a yeah, gold peaked right around this time frame. But you can see here that this is uranium divided by gold. And what it's at, look at this. Look at this last run in gold. And uranium was going down the whole time and gold was going up. So I expect uranium to outperform gold. And when uranium runs, it really runs. It reminds me of silver. So we very likely will see that again. Now, let me go. This is a good time to go take a look, guys. Here is URA's holdings with the weightings and what Friday's gains were. Now you're going to say, well, Bruce, why don't you have a symbol? Well, that Kazapron, okay, is somewhere over in those countries and some exchange, and it's very difficult to get a quote. So when I can't do that and I get the chart, and some of these guys didn't move that much. Like I own Sabani Stillwater. I've got it under uranium because not only or uranium, I've got it under platinum and palladium, right? Because it has those white metals, but it also gets uranium. But Friday wasn't its big move, but SBSW, I bought some additional shares just for a 5 or 6 day swing trade and made about 25% on that. I keep my core holdings. But you can see here that it has a uranium element to it as well. So but don't just judge the chart. Well, heck, let me do that for you. I'll show you exactly what I mean by that. Here's SBSW, right? So look from that early April, it was $3 and it's over $6. So you got a double in less than 2 full months, right? Most of April, now we're most of May. So less than 2 months, you basically got a double. And it pays a dividend. They don't show it on here because I think they suspended it when it was down here, but I think it's coming back. It's not a lot, but these are the kind of companies when they get going and the miners get going and these prices go nuts on platinum and palladium. These things could be paying $1 or $2 and have a yield of 5, 8, 10% a year. So you're talking about growth and a decent yield, not a high yield, okay? But you're playing it for a different reason. You're playing it for massive growth. All right. So look at some of these. Cameco, and these first two are identical. If I go over here to uranium, well, I take it back. Sprott Uranium Physical Trust, right? So they literally buy yellow cake and store it, right? And so it's tied to the physical price of uranium. And that was up 8.35. Cameco, one of the largest mining companies. It's second to Kazatomprom, but it's a from a North American standpoint, it's the largest uranium miner in North America. And then I find it interesting. URM has some of the medium, average, medium size, and some small ones in their top 10. But if you look at URA, Now, this is a medium size. This is at new scale power with the SMR, small modular reactor. But this is a big, big company. This is medium to big. They got Hyundai Energy and Construction. I can't even get the symbol because it's somewhere probably in Japan. And this one is somewhere in the world, right? I mean, they do list a symbol, but it wouldn't do you and I any good. We can't buy it like that. You have to find a 80 ADR, and I don't believe there is one here. Um, so I wanted to point out to you, they all take a different approach. But it's funny, I built this one first, and I didn't see Denison, I didn't see Paladin, I didn't see Energy Fuels. And I'm thinking, hey, here's a few other smaller players I like. And then sure enough, when I reported on this, I was like, oh, Energy Fuels, Denison. I didn't post Deep Yellow. But then I went and did it, or did I post it? No, I posted Energy Fuels. So they've got many of those, and this is a smaller mining company. So these are the weightings. They give you the complete holdings. I just took the top 10, the highest weighted 10 stocks in their portfolio. And then I said, what did they do on Friday? Look at this, Uranium Energy, 645 stock, was up 25% on Friday, guys. Look at this. So, and there's nothing wrong with buying this stuff. And if you get 100%, take half off the table and just, you know, then you're on house money. And this can happen. It can, I expect these to go. They may pull back some right now. They may not. I expect them to go much higher over time, but not unlike some of this. Let's do this. Because 2020 things were pretty high. Last time uranium miners all spiked was 2007. And some of those penny stocks went to 10, 15, $20 from 5 cents. Okay. So this gives you an example. Look at this. Nothing, nothing, nothing starts moving. But if you bought it at $8 here, thinking it's going to go to $30, you come back and see $4 a year later. That's depressing. So, what does that say to you? You want to be aware of it, that there's just volatility. So we've just gone through another one of what I call these winter moves, right? Was $8.50 and we pulled back to 4. So we're probably going back to 8, and then maybe we only go to 6, and then we take off and run to 12 or 13 or 15. And that's your trending. So if I were to draw a channel, I could take this point, connect this point, and come out here like this. And then on my up points, I could do this. So I get a line that's constantly going up, and I get a parallel line that's trending that way. And I'm probably going to toggle between the top and the bottom, guys. So if you learn nothing more, learn some of those kinds of things for these asset classes. I'm not asking you to be a trader. I'm just telling you, if you buy this thing at, just UEC, it's likely going to pull back to 6 here at some point. Let's say you buy it at 6. If it goes to 12, I'd put a stop in at 10, or I'd take half it off the table and then just let it ride. And you don't care if it goes back to 6 as much, because it's probably going to go to 10 and 15 and 20 over time. And that's how you have to treat these kinds of volatile and yet very important mining companies that are producing things that we need, energy. Think of all the poor people in the world that are just trying to get up to the standards of a Canada, the United States, of an England, of France, right? That their per capita consumption of energy is like 1/15 of what the average US citizen does, and they want it too. Everybody wants energy. There are places in the world they don't even have energy, right? That poor people that live out there, certain parts of India, they still have massive brownouts and under energized, right? So, and China the same way. So these grids all need more energy. We need it in the US mainly because of AI and all this supercomputing needs that are going on. All right, guys, I'm not, you can go out, follow up this. My big point here is to just show you some of these miners. Next Gen 14, Boss Energy. I showed you the two I owned. So I was up 12.14 and 11.61 just in those guys. All right, let's move through a little faster now. All right, a return to 2021 peak, because that was the last peak in uranium, right? To this ETF, to the physical spot or uranium price. So it got up to like a candle, but was around $4. We're at $2. So there's still a lot of upside left in a ratio chart. So uranium in 2007, 2008 got up to 148, or is that, yeah, $148. Okay. We moved up to 106 and everybody thought, oh, here we go. We're going to go up to 140, form a cup and a handle and run up to 200. What did it do? It pulled back to $60. But that in itself was, I kind of expected that. I did not expect the stocks to get beat up to the level that they got beat up. But I held on to my URA and URNM and just added. That was my mentality. I wasn't selling covered calls. I'll sell covered calls next time they're up like this and just go out 2 or 3 months. And, you know, if my URM runs to 100, I may go sell a 110 or a 120 with premium out 3 or 4 months. And if I get taken out, I get taken out. Most likely I won't. It'll just hover around 100 or stay there or go down slightly, and I'll just pick up the call premium on the covered call. I did that a few times. So here's SRUUF, right? We saw it before as being held in some of the, or in both of those uranium funds. I did not show you the holdings of URNJ, guys, but you can look it up. I will next time I do an update on this. I'll go down and put it in. I wasn't even expecting to include it. And then I started looking at what I needed to do, and I said, oh, yeah, I got to put that in there. Now I got to go get the dividends and so forth. So this thing ran up the Sprott Physical Trust, symbol SRUUF, got to $25 because uranium got to about 104, 106. Well, look what it did when uranium pulled back to $60. It got down here and it had a low candle here at under 14. Now we're up 16 and a half ish. Okay, let me pull it up. SRUUF. 1687, guys. There's the chart. So big move up, a consolidated pullback, and this appears to be the bounce that will sustain, because when you draw your line here, it's a small breakout. Now, if it breaks down and doesn't continue, then it's still in this channel of going down. But it appears that's a pretty aggressive channel. I mean, the most you usually ever retrace is 100%, but it also went from about here. So we went back 80 something percent in that retrace, which should be more than sufficient. All right. So having said that, my target is to go back to those levels. That's where I would take some off the table. So you got between 1687 and 25. So you've got over a 50% move that's likely out there. And that's just on the physical. The miners will do much better than that. but you're always safer. In the physical, you don't have a CEO that says the wrong thing, or you don't have a CFO that cooked the books and they get fined, right? Or they get a lawsuit against them. Physical is physical. So you don't have all the trappings that a corporation and a mining company can have. All right. So here's your daily 200-day moving average, various technical things. We know the 25 move is certainly a target. And if we go up, that probably will cause a consolidation. It may even form a little triangle wedge and go sideways for 2 or 3 months. And it end up being a halfway point, and then we go on up from there the same distance from this line to there. So it's hard to say when and what these things will do. So profit targets, right, on URNM, knowing it's $41, number one is 60. Number two should be, 90. And remember I said that's a halfway point, 60 to 120. And that should be your third target. If you haven't taken everything out, you probably should. But that doesn't mean you're done with everything. I just would make sure I've sold sufficient to get all my money back and more. So here's URM, more on a daily, showing the little inverse head and shoulders are also known as a cup and a handle. And what did it do? This is a smaller time frame, so it doesn't need that big a handle. So there you go. It gets the handle. And what does it do? It pops up. Now, what have I taught you guys about technical analysis? Half the time, you consolidate a little bit and you form what's known as a bull flag and you go up. Sometimes that bull flag will fly like a flag. So when the wind lessens, the flag flies out down here. And if so, you test this breakout line, right? Which would go right, whoops, the breakout line runs right here from this point to this point. So we're up here. Very likely intraday, we could come back and test the breakout line or just flag up and down around it and then take off again. The best of all cases is some big news, some big energy shortage, and we do what's known as a breakaway gap. So you break away here with a gap, then you gap up and break away. And I've seen 4 or 5 sticks like that running up a huge amount. And those are called breakaway gaps. Okay, multiple. All right, URNJ, we were just talking about it. An inverse head and shoulders and a breakout. So, guys, um, that's all I really wanted to do. I like to bring attention. I like to show you charts. I like to talk a little bit about the technicals, a little bit about the demand, the fundamentals, the undersupply. And the key thing I learned back in the 2000 decade when I was in commodities and planning my retirement was a very known factoid that most people didn't fully understand. They're like, well, Bruce, uranium can't just go from $20 a pound to $200 a pound. I mean, nobody could afford to buy it. Wrong. Because when you look at a nuclear plant, I'm just reminding you, your build out cost, your operating costs, your equipment, the actual budget, and an annual budget of an operating nuclear facility, the actual raw materials that they buy are around 2% of their cost. So if 2% of something goes up 5x, it's possible. And what they do when they do these things, they'll do a 5-year contract. Some energy company through a mining company where they've acquired all the pounds will sit down and they'll go out to a Duke Energy or Southern Cal Energy or any of the U.S. Energy companies or any energy companies that have nuclear reactors, and they will negotiate a 5-year supply, sometimes an 8-year supply. Name anything else that you can go out and buy gasoline or eggs or something. You can't do it. That's why you have futures market. But these big utilities like that do want to know that they've spent all this money on a nuclear reactor. But look what you have coming. You have a lot of contracts ending. So when you have an 8-year contract and it's coming up for renewal and spot's gone from $40 to $70, get ready. You're thinking, well, I better get it at 70 before it goes to 100 or goes to 110. So that's why it costs, and that's why these things can go up a lot higher than you think they can go up, because it's not like, okay, well, none of the nuclear reactors are going to buy uranium if it triples, if the raw material triples in price. Not true. They don't want that to happen, but it happens, and it happens many times. All right, guys, that's what I got for you on uranium. So if you don't have a boatload of commodity info to think about, I see it in the questions. Great questions. Keep the questions coming. I try to answer all I can. I'm small enough now I can get through all of it. I can't promise that I'll always be able to do that if I get up here and get to 20, 30, 50,000 subscribers or whatever, which I want to work this. If you guys are smart, people say to me, well, I don't know, Bruce, I appreciate you doing the metals, but, I'm kind of going, I don't think institutions are buying. Guys, institutions are buying the big mining companies, be it uranium or be it gold. Now, they have analysts that aren't touting them, aren't raising their estimates. It's really almost like collusion. That, you'll have like Newmont. Newmont's just been doing much, much better, right? Largest mining company in the world. And with this last quarter, they were massively up in their earnings. Analysts were downgrading them. If that's not like what they call fake news, literally fake news, why buy Newmont? I'm downgrading them. What are you downgrading? I don't expect their earnings to be good going forward. Based on what? Based on the fact that the smart money wants to get all it can before you raise the forecast, and by next earnings, they're going to blow it out even bigger. So, I mean, I hate to say it, but there's collusion out there to keep people from it. Look at silver. It is paper regulated to hold down the price because in silver, it gets consumed. Uranium gets consumed. Gold doesn't get consumed. It's a fear trade. People sleep. I sleep better at night knowing I have wealth in gold, right? And that I have a Misty or I have BTC or something. So I have digital gold as well, but it's a different entity. Most commodities, and here's one other little factoid that you guys should know. Low prices. What's the solution to low prices? Low prices, because in all commodity cycles, not in gold, because the fear trade, a war cycle, inflation, etc., that causes gold to move. All other commodities is supply and demand. So if you have a bad corn crop because you had an infestation of, you know, something, or you had bad climate, you didn't have enough rainfall, you just, you had, what do you call it, a drought, or you had too much heat and it killed the plant, then that hurts, and then people find an alternative to corn. They get wheat or they get something else, and then all of a sudden corn's prices just drop to where people say, oh my god, they're so low, I'm going to go out and plant a bunch of corn. And all of a sudden, but that's what has to happen sometimes, is prices have to get really low. So that's the solution to low prices, is more low prices. And when it flips, and then it's in the up cycle. And they just repeat. It's almost like alternate decades that commodities in general run. And you have things inside that, orange juice and coffee and cattle, but I'm talking usually in the grains and in the metals and certain things like that. They're just it's supply and demand oriented. And that's what you have in uranium right now. And metals also have silver has a small monetary side, not like gold, but it does have a monetary side. All right, guys, I'm going to let you go. Done enough on commodities. Again, this is Bruce with Targeted Wealth Creation. I'm not a financial advisor. This is not financial advice. Enjoy your last day of a holiday weekend, people. Talk to you soon. Bye for now.